Greetings, Grade 12 learners. My name is Mr. Simbi and welcome to today's accounting class. In today's class, I'm going to be doing fixed tangible assets. Here's the lesson map. I'll look at depreciation, calculations, and I'll also incorporate that with note 3. I'll also look at the one-rand residual value calculations as well as the asset disposal. Here are my objectives that I've already mentioned when I started. That is, I'm going to do calculations and concepts that relate to depreciation. And then the preparation of note 3, that is the calculation of certain missing amounts. I'll also do calculations that pertain to the one-rand residual value principle. And then here are some key words and language: fixed tangible assets and depreciation. From grade 10, you did calculations on depreciation, and you also completed note number 3. In grade 11, you did the same again, and you also did disposal of fixed assets. In grade 12, we will continue with depreciation using the cost as well as the carrying value method, and we'll also record information on note 3 and record the disposal of assets. Here are some critical common errors. Here is the exam writing competences. Dear learners, let us go for an ad break and I'll see you shortly. Welcome back, dear learners, from the ad break. We will now begin to do calculations that pertain to depreciation as well as some information that may be missing on note 3. Here is some content and skills problem. What are fixed assets? These are long-term resources owned by a company that are used in the production of the company's goods as well as services. These assets are not intended for resale, very key. They are not intended for resale and are typically used for more than one financial year. Examples include your buildings, so we're talking land and buildings, machinery, vehicles, and equipment. We have an activity here, and which is adapted from the June 2022 paper, and it reads: Yantis Limited. The information relates to the financial year ended 28 February 2022. Required, we're going to calculate number 1 to number 3. And this information, we find it on the fixed asset note. Let's start with calculating number 1. Number 1 is the carrying value. Already from grade 10, you were taught this, that if you say cost minus accumulated depreciation, it will give you your carrying value. Very important. So you come here and you now say the cost that you're given is 2,350,000 and your accumulated depreciation is 840,000. So let's have our calculator. So we say 2,350,000. Then we then subtract 840,000. It will give us 1,510,000. So the answer to number 1 becomes 1,510,000. That becomes my carrying value at the beginning of the year. When we're still here, it is very important to note that whenever you are given shaded areas, you don't write in the shaded areas. The shaded areas means do not write here. So you ignore the shaded areas. You don't write anything in the shaded areas. We're going to move on now to the next calculation. Let's see what we can calculate next. The next calculation is number 3 over here. This is my disposals. It is very key to note that my disposals are disposals at carrying value, not at cost. In this note, I record my disposals at carrying value. I am told an old vehicle was sold at carrying value on 30 November. So what I know is that it was sold at carrying value. That means there was no profit and there was no loss. On 30 November, very key, very important that you take note of dates. The cost price of this vehicle was 252,000. Its accumulated depreciation was 172, and vehicles are depreciated at 20% per annum on carrying value. So I know that if I take the cost, which is 252,000, and I subtract the accumulated depreciation, which is 172,000, it will give me my carrying value. So let's do that together. I'll now say 252,000 minus 172,000. And that will give me 80,000. So my carrying value is 80,000. That is my carrying value. And depreciation is calculated on carrying value. So I'll take the 80,000 and I'll now say multiplied by 20%, that is the depreciation rate now. I need to know for how many months I had the asset for. And this financial year is ending in February. So I will now say from March, which is the beginning of the financial year, up to November. I want to encourage you in the exam, use your fingers. So you say March, April, May, June, July, August, September, October. Do I count to November? Yes, because it is 30 November. How many months do I get there? I get 9 months. So I come here, then I say 9 over 12. Okay? And then if you punch that on your calculator, you are now saying 80,000. Let me punch it in again. 80,000. Then I'll say multiply that by 20%. That gives me 16,000. Then I can simply say divide by 12, multiply by 9. And that will give me 12,000. So my depreciation for this year is 12,000. So I have an asset that I've sold at carrying value. This asset at the beginning of the year, it had carrying value of 80,000. However, this year I have used it again. So it has lost value due to depreciation and it has lost 12,000. I should get the carrying value on the date of disposal. So I'll now say the 80,000, which was the carrying value at the beginning, minus 12,000, which is depreciation. It will give me 68,000. So here I end up now with a carrying value of 68,000 on the date of disposal. That becomes my number 3, 68,000. That becomes the answer. Okay? Dear learners, we're going to take an ad break and I'll see you shortly. Welcome back, dear learners, from the ad break. We have done depreciation calculations and we recorded the information on note 3. Now I'm going to look at the 1 rand residual value. Okay, so here are some content and skills problem. Okay, and then what is this 1 rand residual value? It is when an asset has reached the end of its useful life. Okay, it is when the asset can no longer depreciate. 1 rand residual value is the estimated amount that an asset will be worth at the end of its useful life after it has been fully depreciated. This value is considered when calculating the depreciation of an asset. Because the asset is still in existence, we seek to keep it in the business books. So we cannot record it at a negative, neither can we record it at 0. So we then strive to have a figure to record it in the business books. So we end up recording it at 1 rand. But what would have led to such a situation? With me here, I am going to calculate depreciation, which is number 2. I'm told additional equipment was purchased on 1 October and equipment is depreciated at 10% on cost. So, once I hear additional, that means that becomes my new asset. So I must be having the old assets. The old is what I will be having right from the beginning. And the old one has a cost, which is 640,000. That is my old assets. And depreciation is calculated at 10% on cost. That means I'll now say 640,000 multiply by 10 over 100 multiply by 12 over 12. This would then give me my depreciation amount, which is 64,000. Okay. Now, this amount seems as if it is correct, but in actual fact, it is wrong. Why would I say that? This particular asset has a cost of 640 and its accumulated depreciation is already 612,000. So, if I were to take the 640,000 and then say minus accumulated depreciation, which is 612,000, then I add the new depreciation for this year plus the 64,000. That would mean if I say 612 plus 64, that is going to give me 676,000. So I would be saying cost 640 minus accumulated 676. I'm going to end up with a negative 36,000. There is a problem. We cannot record an asset in the business books at a negative value. It is an asset that is still in existence. Physically, it is existing. So we cannot record it at a negative value. So that then tells me that this asset has reached the end of its useful life. So I need to apply now the 1 rand residual value. So when I am doing that, then I will come and say that depreciation therefore is wrong. And then I cannot use that 64,000. I would then come to the 28,000, that is the carrying value. So I'll now say on my carrying value, which is 28,000, I will lose value to depreciation, but at the end of it, I must still have carrying value, which is 1 rand. So, if my carrying value at the beginning is 28, and my carrying value at the end must be 1, the difference between the two becomes my depreciation, therefore. So I'll say 28 minus 1, then it gives me 27,999. That becomes now my depreciation. So the depreciation for this asset is 27,999. How do I know that the examiner is going to test me on this 1 rand residual value? 2 points. First point, whenever you see that your carrying value is now low and you calculate your depreciation and your depreciation for the year is higher, 64,000, than the carrying value, the examiner is therefore testing you on the 1 rand residual value. Second point, the examiner would normally test this when he brings the cost method. In other words, once you see that your depreciation is on cost, you must open your eyes because you are likely to get tested on the 1 rand residual value principle. So in this case, our depreciation is 27,999. So I can come here and I can quickly open a bracket and I'll say 27,999. Then I say plus. So this was my old. Now I need for the new. What is the cost price of the new? 195,000. 195,000. Multiply by the rate, 10%. Multiply by the... When did we acquire this one? 1 October. So again, we use our fingers. We say October, because it's 1 October, so we count October. October, November, December, January, February. Then the financial year ends. So that means we used this asset for 5 months in this particular year. And then my depreciation becomes 8,125. So I'll come here, then I'll say plus 8,125. I close my bracket. And then the total on your calculators, how much do you get? You get 36,124. So after getting your 36,124, that becomes your final answer for number 2. And you're sorted. Remember, you don't write in the shaded areas. Let's go on to the next part. Now, this is all the answers that we required from us. So we've answered number 1, number 2, as well as number 3. Dear learners, let's go for an ad break, and I'll see you shortly. Welcome back, dear learners, from the ad break. So far we have done depreciation calculations and recorded on note 3. We have done the wandering residual value calculations. Now we're going to do asset disposal. The question reads, refer to information A and D. Here is A and here is D. The business depreciates equipment at 30% per annum on the diminishing balance method, not diminishing balance method. On 30 November, they decided to trade in a photocopying machine for a new model. Okay, so there's one that is being disposed here because they're trading in. Calculate the loss on the photocopy machine that was traded in on 30 November. Now, I want to do this using the grade 11 method that you've done. Then I'll show you again another method. So the first way, I'm going to show you how to open an asset disposal. Now, when you do an asset disposal, you know that you come here and what do you say? Equipment. This is what we're disposing, isn't it? Equipment. What was the cost price of this equipment? There it is. Cost price, 320,000. So I'll come here. There is my 320,000. And then I'll also record now my accumulated depreciation. Here's my open bracket. How much was the accumulated depreciation at the beginning of the year? 96,000. There it is. 96,000. Then we have to add the depreciation for this year. We're told a photocopy machine was traded in for 88,000. So once we trade it in for 88,000, that 88,000 comes here, and then I'll say now creditors control. Okay, creditors control. And I'm going to have my 88,000 over there. Then, for a better model, the cost price of the new was 410,000. Okay, so I now need to get my depreciation here. And to do that, I'll come and I'll say, remember what is key. We depreciate at 30% per annum on the diminishing balance method. That means I need the carrying value. And to get the carrying value, I'll say the cost, which is 320,000, minus accumulated depreciation, which is 96,000. It will give me carrying value. So I'll come here and I'll get my carrying value. So remember, I'm saying 320 minus the 96,000. Minus the 96,000. That will give me 224,000. So I'll come here, I have my 224,000. And then, when I have my carrying value, then I can multiply it with the rate, which is 30%, multiply by 30 over 100. Then I multiply that by the number of months that we had the asset for in this year. So, we know that this is ending on the 20th of February. That means it begins in March. So I'm going to say from March, April, May, June, July, August, September, October, November. Why did I stop on November? Because they told me here it was disposed on 30 November. Okay, so I'm going to come here. How many months do I have there? I have 9 months. Multiply by 9 over 12. Calculators, please. How much do you get? 50,400. That is my depreciation for this current year. So I'll come here, then I'll say plus 50.4. Calculators, guys, how much do you get? If you say 96 plus 50,400, you get how much? 146,400. Beautiful. Now, we can now close this ledger account. How do you close a ledger account? With the side with the highest amount. Okay, so which side is the highest amount? It is your debit side here. So I'll come here, then I'll say 320,000. So I'll come here, is 320 here. I have another 320 here. Okay, now I need that amount there. To get that, I'll now say 320,000 minus 146,400 minus 88,000. That gives me 85,600. 85,600. Then I call that loss on sale. Okay, I could have said profit and loss. All right, very correct. But what I wanted you to understand is that once the amount is on your credit side, it is a loss on sale. If it was on the debit side, then it would have been profit on sale. Okay, here's another way that you could have done it to get the loss on sale. You would have simply said the amount that you're given, which is your carrying value, your 224,000, which is your carrying value. Then you subtract now your depreciation for the year, which is 50,400. So it's your carrying value minus depreciation. It will give you carrying value at the end. So carrying value at the beginning, 224, minus depreciation 50.4 gives you carrying value at the end, which is 173,600. That is carrying value at the end. Once you get your carrying value at the end, which is 173,600, then you now say this asset was disposed at 88,000. So you now say selling price, which is 88,000, minus your disposal at carrying value, 173,600. Whatever your calculator gives you, you take it with its sign. If it's a positive, it's profit. But if it's a negative, it's loss. So you're simply coming to your calculator and you're saying 88,000 minus 173,600. And then it gives you a negative 85,600. A negative 85,600. Once it is negative, that's a loss. So we have got the loss on the sale of asset, 85,600. That was the quickest way that one would have done this particular question. All right, I'm going to quickly look at one question that has to do with internal control over fixed assets. And it says, the information relates to the fixed tangible assets for Just Time Footwear. The financial year ended on 20 February 2021. List 3 points for good internal control over movable assets. It is very important, dear learners, that you also prepare on internal control over movable assets. Okay, so number one, you need to maintain an updated fixed asset register. Okay, that is, you record your depreciation and the carrying value as well as the condition of the assets. Secondly, you need to regularly inspect your your tangible assets. You need to regularly physically inspect your assets, count the items, and also identification tags must be put on the assets. There has to be regular service and maintenance on the asset, as well as having maintenance plans, and ensure that this is done regularly so. An insurance plan to cover loss, damage, and accidents. This is very, very important. Keep a logbook and mileage and install tracking devices. So these are some of the answers that you can give in the exam when an internal control question is posed to you. And with me here, I have a question from the NSC November 2023. And we are required to calculate certain figures. And to begin with, we are going to calculate the cost price of vehicles on 1 March, as well as the trade-in value received on the vehicles disposed on 1 June 2022. It is very important, dear learners, that when you read your question paper, get to understand where the examiner is coming from. And then, to begin, it says, calculate the following: the cost price of vehicles on 1 March. Cost price of vehicles on 1 March is this question mark here. So we want to know, what was the cost price of the vehicles on 1 March? We know that as of 28 February, it is 930,000. That is at the end. And then, information C tells us a vehicle was traded in. So there is disposal now, costing 260,000. The extract of the fixed asset register reflected the following. Okay, so we have a new one and an old one that was disposed. Remember, that was a trade in. Okay, so what they want us to do is to calculate that question mark, knowing that at the end we have 930, we have a new one, and we have one that we have disposed. To do that is very simple. You simply say the asset that we have at the end, the vehicles that we have at the end, that is your 930,000. Your 930, and then you subtract the addition minus the 260,000. Okay, so we're now saying 930,000 minus 260. That will give you 670,000. On that 670,000, then you add in the one that was disposed. Then you say plus the 180. Plus the 180. So we come here, then we say plus the 180,000. And that will give you 850,000. So I'll come here, then I'll get 850,000. That becomes the answer to the cost price of the vehicles on 1 March. This is the cost price of the vehicles at the beginning of the year. Let's go on to the next one. And it reads, calculate the trade-in value received on the vehicle disposed. Remember, there was a trade-in. But what was the value that we had attached to the vehicle when we sold it, when we disposed it? Remember here, it was a trade-in. Okay, so when we did the trade-in, what was the carrying value of this asset? So in other words, we want to get the carrying value on the date of disposal. To do that, we will now say, this vehicle had a cost price. The vehicle had a cost price. Its cost was 180,000. All right? And then it had lost value due to depreciation accumulated, which is 64,800. Now, if I were to do it the asset disposal way, I would come here and remember, I would say vehicles, which is your 180,000 here. And here I would say accumulated depreciation. And I should always open a bracket here. At the beginning, it was 64,800. So it's the same as what I'm having here already. But I know that I used this vehicle during the year. All right? And very important that you understand that your vehicles are depreciated at 20% per annum on the diminishing balance. So if I say cost minus accumulated, it gives me carrying value. And my carrying value here is going to be 115,200. Then on that carrying value, I depreciate them at 20% per annum. Multiply that by 20 over 100. Then, for how many months did I have the asset before I disposed it? It was traded in on the 1st of June. So that means I'm counting from March, April, May. Do I count June? Because it's the 1st of June, I don't count June. So I'm going to have how many months? 3 over 12. On your calculators, guys, how much do you have? 5,760. Thank you. So I'm coming here to say plus 5,760. I close my bracket then. How much is my total depreciation? 70,560. And then I will now say, we have made a profit. Note, the profit on disposal of this vehicle was 5,560. Okay, I know that if it's profit, I'm going to bring it to my debit side. Profit here is going to be 5,560. So I'm simply going to close my ledger account, the side with the highest amount, 180,000 plus 5,560. Okay, so that's going to give me 185,560. Then I'll now say my 185,560 minus my 70,560. And then I'm going to end up with 115,000. 115,000. That becomes my creditors control. This is the trade-in value on the vehicle that was disposed. Are we good? All right. So I wanted to do it on an asset disposal so that you can have a feel of what goes to which side. But remember, you can always do the calculations on a straight line. There was no need to open an asset disposal as long as you know what calculation goes where. Okay, let's go on to the next question. And it reads, the bookkeeper calculated depreciation of the computers as 300,000 by 25% to give us 75,000. Explain to him why his method is incorrect and provide a calculation to support your explanation. Okay, so let's go and see. On the computers, computers are depreciated at 25% on cost. So our computers have a cost price of 300,000. That is, at the beginning, 300,000. And the accumulated depreciation is 262,500. So I want to see now if I would take these computers and then I would say the cost here is 300,000. Okay? And then I would come and say minus accumulated depreciation. And my accumulated depreciation is no longer 262 because the bookkeeper has calculated 75,000 for me. So I would now say 262,500 plus the 75,000. That is what I would then do. And if I say that is my 262,500 plus the 75,000. That would give me 337,500. 337,500. And then I need to get here what we call carrying value. And I know that cost minus accumulated gives me carrying value. So I'm going to come here and I'm going to say 300,000 minus my accumulated, which is 337,500. And it will give me a negative 37,500. A negative 37,500. Now, we have a problem then when our carrying value is negative. An asset that is still physically existing cannot be recorded in the business books at a negative value. It's an asset. So that is why they're saying the method here is incorrect. Because once we take the 75,000, it leads us to have a negative value of 37,500. Now, we have proved that that particular calculation is incorrect. So, explain to him why his method is incorrect and provide a calculation. We've provided a calculation to show that we can end up with a negative amount. All right. Now, he has not realized that the asset is almost fully depreciated. The 75,000 cannot be correct, as this would lead to a negative carrying value. A fully depreciated asset must retain 1 Rand book value for disclosure purposes. So his depreciation cannot be 75,000. But the depreciation would then be, he would simply say, the 300,000, which is the cost, minus the accumulated, which is 262,500. All right? So we're going to come here. So we're going to say the 300,000, which is the cost, minus the 262,500, which is the accumulated. So the carrying value was 37.5. 37,500. That was the carrying value. So you would then take that carrying value, of 37,500 and say minus depreciation. But we must then have the 1 Rand is equal to carrying value, and that carrying value must be 1 Rand. So my depreciation therefore would be 37,500 minus 1 Rand, which becomes 37,499. That becomes the depreciation on this particular asset. Dear learners, let's go for an ad break, and I'll see you shortly. Welcome back, dear learners, from the ad break. Now, I have an interesting question which is from the May-June 2023 paper, and it reads, calculate the profit or loss on disposal of asset. Okay, so this is one of the most common questions that you can get. And in order for you to get that, it is very important to know, because here they want us to say whether it's a profit or it's a loss. And I want to show you the quickest way to ascertain whether it's a profit or a loss. You simply say the selling price minus the carrying value, and it will give you, if it's a positive, it's profit. But if it's a negative, it's loss. Let's see. What was the selling price of this particular asset? An old vehicle was sold for 91.5. So the selling price becomes 91,500. That's the selling price. Minus. Now we need the carrying value. We're told the carrying value as of 1 March. 1 March is the beginning of the financial year. That is 104,000. So we know that we have used the asset in this year. So I'll now say my carrying value, which is 104,000. Depreciation is at 20% per annum on the diminishing balance method. All right, so I'm going to come and say multiply that by 20 over 100. For how many months did we have this asset? It was disposed on 30 November. The financial year begins in March. So, fingers. So we're going to say March, April, May, June, July, August, September, October. Do I count November? Yes, because it's 30 November. How many months is that? 9 over 12. All right, let's see on our calculators how much you're going to get. So it's going to be 104,000. Multiply that by 20%. All right, I'll simply divide by 12, and then I'll multiply that by 9. And that will give me 15,600. So my depreciation for this year is 15,600. So I know that if I say carrying value minus depreciation is equal to carrying value. So if I had carrying value of 104,000, if I subtract the depreciation for this year, which is 15.6, I'll get the carrying value on the date of disposal. So I'll now say 104,000 minus 15,600. And that will give me 88,400. So that is the carrying value on the date of disposal. So I'll come in, then I'll say minus 88.4. Selling price minus the carrying value. And then let's put that on the calculator. So it's going to be 91,500 minus the 88,400. And that will give me 3,100. 3,100. On the calculator, is it positive? Yes, it is positive. So once it's positive, that is your profit. If it was negative on the calculator, it would have been a loss in that case. Okay. Let's go on to another calculation. Make sure your calculators are close, okay? Okay, cool. Let's do that. Here's the next one. It says, calculate the total depreciation. Ooh, so this one, you need to be ready because we're going to calculate the total depreciation. Let's see. We know that when we are calculating depreciation, you calculate for the sun. For the sun, that is your sold, your owed, as well as your new. Sold, owed, and new. Very, very important. But here, we're required to calculate the total depreciation, that is for the year. In other words, we are looking at our total for vehicles and our total for equipment. Let's start with the vehicles. On the vehicles, we have depreciation for the sold. We calculated that one. You remember that? That was your 15,600. We've done that one. Okay? And then you have depreciation for the old. We are told here that depreciation for the old remaining vehicles, 145,200. So I'll come in, that is 145,200. Okay, so if I add this to my total on vehicles alone, is going to be 160,800. That is on the vehicles alone. Let's come to equipment. When I come to my equipment, remember, I'm also going to calculate for the old. Okay. Equipment is depreciated at 15% per annum on cost. So, for the old equipment, I will come here, then I'll see. In 2022, equipment was 774,000. But in 2023, there is a change. Can you see that? It's now 882. What could have led to that? We have a new piece of equipment. New equipment was bought on 31 July, but they don't tell us how much. So the 774 becomes the old because it was there right at the beginning. So I'll say my 774,000 here. That is the old equipment. Then depreciation is 15% on cost. Then I'll say multiply by 15 over 100. Then multiply that by 12 over 12 because it is the old one. And my depreciation here is going to give me 116,100 on the old. Now, I know that I have a new one, the new one that we've just acquired. Okay? They don't tell us the cost, but we can get the cost. We say 822,000 minus 774,000. That will give us the new one. That is your 48,000. So the new has a cost price of 48,000. And the depreciation rate is at 15%. And for how many months did we have that? New equipment on the 31st of July. Do I count July then? Certainly not. Where do I start? August. August, September, October, November, December, January, February. Then the financial year ends. How many months is that? 7. 7 over 12. Punch that in your calculator. How much do you get? All right. You get 4,200. Now, I'm going to add this one plus this one. And how much do I get? I end up with 120,300. 120,300. So I'm going to add that one now. 160,800 plus 120,300. And the total is going to give me 281,100. That becomes my total depreciation for the year. Very important that you're able to calculate for your sold, your old, as well as your new. Very, very important. Now, the depreciation calculations are infused into cost accounting. So here they say, calculate the depreciation on factory equipment. Cost accounting, therefore. All right. So we're told depreciation on the factory equipment is calculated at 20% per annum on the diminishing balance method. Old equipment that was originally purchased for 124 was sold. That means I have my sold here. It was sold at its book value. It had accumulated depreciation of 34,720. No entries have been made in this regard. So I know that on my sold, its cost was 124,000. That was its cost. All right. And it had accumulated depreciation minus 34,720. Which method are we using? Diminishing balance. That means it's going to give me carrying value now. How much is that carrying value? 89,280. That is the carrying value. Then I'll say that 89,280, I multiply that by the depreciation rate, which is 20 over 100. For how many months did we have this asset before we disposed it? You will see that it was disposed on 31 July. So you're counting from March, April, May, June, July, 31 July. So that is 5 over 12 months. And that will give me 7,440. That is depreciation for the sold. And then we go on. New equipment. But before I go to the new, it means I also have the old equipment. All right? And then I'm told here, depreciation on the remaining old equipment, they gave it to us. Old is 84,000 here. So I can now calculate for the new equipment. Remember now, the son, sold, old, new. New equipment was purchased at 215,000 cash on 1 September. It was recorded. Okay, but here we're calculating depreciation on the diminishing balance method. So we don't need to subtract accumulated depreciation because this is new equipment. So I'm just going to say my 215,000, multiply that by your 20 over 100. For how many months have we had it? On the 1st of September. So I'm going to count September, October, November, December, January, and I have February here. That is 6 over 12. And then that is now going to give me my depreciation for the year, which is 21,500. And then I add this amount, and that amount. And the total depreciation that I then get is 112,940. 112,940. And then I bring that now onto my factory overhead cost note. And then I'll say depreciation. And the depreciation amount is 112,940. That is how I would do it. Very important to know that your depreciation calculations can be infused in any of the topics that may be available. Dear learners, let's go for an ad break, and I'll see you shortly. Welcome back, dear learners, from the ad break. So far we have done depreciation calculations and we recorded in note number 3. We have done calculations that pertain to the one-run residual value principle, and we have done asset disposals where we dispose an asset, trade it in or sell it, and we're able to calculate either profit or loss. Here is a recap of keywords and language. We spoke about fixed tangible assets as well as depreciation. Here are some critical common errors. For further exam practice, I want to encourage you to look at these past exam papers, telling us when you practice, it helps you to do better on the day of the exam. I wish you all the best. Until next time, goodbye.